This is Eric Mwale, themwale.com. Thursday, February 26th, 2009. The Dow is called to gap up about 80 points at the open, and we'll see how the day shapes out. On this video, I have about 3 new ideas for you guys to consider going long. 3 new ideas that I feel have the potential to move for us and make us some money in the coming weeks. And also I want to ask a very serious question. What if we are all so bearish, okay, and we might be missing an opportunity on the levels of a lifetime opportunity? It's a question I'll ask, and I'll let you decide for yourself. Question is, what if? Okay. By the way, if you are holding those ultra short ETFs, you know the names, the SKFs, FAZ, SRS. Be careful today, and I'll show you why. Because if we take a look at the SRS daily, first and foremost, you'll see that the stock has had this dotted line here where it has been support on the way down last year. Was support for a while late mid-December of 2008. Once that was broken, it had a hard time moving above that line for many weeks, and when it finally blasted out of that line, it was a straight shot to this area here, the 200-day moving average, where it stalled, and now it's back again, back testing this line. Any break might lead to a severe sell-off. And more importantly, for this very day, is where the RSI closed yesterday around 52.53. So any move today that takes the daily RSI to a close below 50 means that the general market is going to have a multi percentage gain rally today. So watch this level here. Any close below 50 on SRS today guarantees the financial market and the general market a huge rally today into the close, more than likely. Also, the same observation if you have SKF, where it closed with the RSI again just about 52.73, a close below 50, huge down day for these instruments and all the other related ultra short instruments, and guarantees the general market a big move higher. I'm gonna start with my what if questions right now. This is the Dow Jones 29-year monthly chart. Dow Jones Transports 29-year monthly chart. If we take the lows at the rally from the early 90s, Gulf War lows, and the highs last year, this level right here happens to be the 38.2% retracement, and it also happens to be a line that coincides with this upward sloping line that was the low in 01, lows in late 02 and early 03, and also happens to be the level that we are trading around. So this is a critical area. What if we are too bearish? Consider the fact that this is the RSI, and going back many years, as far as my data can show me, this RSI has never been that much oversold. What if we are too bearish and this instrument or the energy system we call the Dow Transport might be ready to snap back out of this oversold area? What if? This is the S&P 500. Again, it's almost like a 30-year monthly chart for the S&P 500. Of course, we see this noticeable double top, and there is an instrument that is also showing a double top, and I'll double top on its monthly chart, and I'll talk about it after a few minutes. But double top on the SPY or S&P 500, this level here corresponds with 50%. This level here, the 2002, 2003 lows that held, okay, that's a fact, they held, happens to be the 50% retracement of the move that started all the way going back to 1983. So this rally from 1983 all the way to this double top, or this top here, corresponds with the 50% retracement of that move. And right now we are trading at levels slightly below that on a monthly closing basis, but we are trading on levels that are just around the 50% retracement. What if we are too bearish? This level here where the S&P is trading at right now corresponds with a line that I draw from 1982 that touches 1985. The 87 crash also stopped right there. The lows in 91 happen to correspond with this line here. What if we are too bearish? Not me, but the general market, because we went long last week and it's kind of been an okay ride, making money. This is the Japanese market 1 year daily. You see the same thing that the S&P 500 did in our markets. The Japanese market has come all the way back and is back testing last year's lows. It just tagged it, the closing low around 71.62 and jumped out of that level. What if general markets are the sentiment is too bearish and there's a rally unfolding? This is a gold, what is this? 10-year monthly chart. The highest monthly close in gold going back many years is 975. This monthly closing high here. Would you know that right now gold is trading at 966? So a close around here this week, or this month, which is this week also, around here, and a drop confirms the double top on a monthly closing basis for gold. That is a bearish signal for this instrument, which is a bullish signal for the general market. What if the general market is too bearish? Consider crude oil. This is 3-year weekly chart for crude oil. Of course, we kind of all know 147 was a little bit ridiculous, but this consolidation over the last couple of weeks around the $40, $30 area is also saying the market's done dropping, and you see this consolidation might be starting to resolve to the upside. The relative strength is also increasing out of this oversold area and starting to pack up. Another observation is that the MACDs are starting to point in the right direction, even the main MACD. So things are happening even in crude oil. If you take a look at the crude oil 1 year daily, you notice that this wedge that was forming and we've been talking about, we saw a move out of that wedge as of yesterday's rally in crude oil. That also happens to coincide with to me, a very critical breakout on the RSI right there, and I'll zoom in. All right, so all these things are coming together. What if the general market is too bullish, and what if we've been right by going long as of late last week? Cha-cha! Now, the ideas I have for you, and this is as far as I go, as far as the free part of this video is concerned. So now let's look at the ideas I am considering for you guys.